Good morning, everyone. Today is the 3rd of August, and we're going to present to you the daily webinar presented by Windsor Brokers. At the beginning, we're going to look at the economical calendar and see what kind of news happened yesterday and that affected the market and gave the high volatility. Today, we had some data on the U.S. economy, which is the most important data, the non-farm payroll. Previous numbers were 80,000 and expected to rise to 101,000. Unemployment rate is expected to be the same at 8.2%, and the ISM non-manufacturing PMI is also expected to be or to stay at 52.1%, similar to the previous numbers. Yesterday we had a statement by Mario Draghi, ECB president, and they talked about doing new quantitative easing to support the euro. However, most of the investors were kind of disappointed because he didn't say anything about the point he discussed during last week, which is that the ECB is going to do whatsoever to preserve the euro. Basically, he didn't mention what he said last week, so traders were didn't like the news that's been happening. So basically, they were selling the currency and selling everything on board against the dollar. Now, if we take a look at the charts, we can see that yesterday's rise of the euro reached the 124.04 area, which is 10 or 5 pips away from the first and most important resistance area on the medium term, which is the 124.10 or 124.30 zone. It was a good selling opportunity, and we've seen a sharp drop towards the area of 121.33. We had the best support level at 121.70, which was broken, and the next level now is 121.19. Currently, euro should have a small correction move due to the sell-off that happened yesterday. The first resistance area, which is expected to maintain the euro, is at 122.16 and then 122.55. A break higher than those two areas is going to lift the euro back again to the previous areas where it was trading during the last week, which is between the 123 area and the 22 area. In regards to sterling against dollar, we can see that also similar to the euro, it already broke the 122.50 latest low, where it actually started the rise, and also almost breaking the 155 zone, which is the area where the rise started to happen during Draghi's speech. Basically, the euro, the sterling, and most currencies, they went back exactly where they started trading on the 26th of July, where the market jumped. So now, also similar to the euro, we're going to expect a small correction, probably higher towards the 155.66 zone and 85 zone. These areas could be the correction for the sterling, and any break or closing below 155 is going to open 154.55 and then 154 level. In general, sterling is still trading in a sideways trend between 155.70 and 154.0. After the rise at 70, it started to drop to 54.90 almost, 80 or 90 pips away from our target of the recent lows where it reached. However, in general, you can see that it's slightly moving in a upper trend like this. So probably the lows we've seen are going to be the lows that's going to rise the sterling. Or if this area were broken, we might see a lower drop lower. As you can see, the sideways trend, the drop that happened during the 19th of July to the 25th of July is the same one that happened since the 27th of July until yesterday. So basically, this was a good buying point, and any break below here, we can use support level as 54.50s, and the target could be the 156.90 or 157 zone. Yesterday's rise was maintained at the peak of the line between those 3 points, which was the 156.75 almost, and probably any rise higher, or at least if this low was maintained, we're going to see a higher rise towards the previous peaks. For dollar Swiss, similar to the euro, the rise was maintained almost few pips higher than the resistance level at 99.09, and the price reached it 98, almost 10 or 11 pips away. The drop where it actually started also was maintained at the low of 96.95, which is few pips away from our also major support level at the 28th of June level at 96.80. So basically, these 2 points are a good support level for the dollar Swiss, and if broken, we're gonna see a reversal in this uptrend, and could go lower towards the 93 or 92 zone. On the short term, the support levels that we're expecting to have a small correction to is starting at 98.18, and then 98.03, and finally 97.80. On the upside, there we don't have any points other than the 99.10 area where it actually started the drop during yesterday. If this point was broken, probably we're going to see a rise again to the previous highs, which was 99.65 levels. Finally, to the dollar yen, we can see that it's still moving in a sideways trend between the 77.95 and the 78.60 zone. Currently, since yesterday, it has made a slight drop towards the 78.06, which is also the previous low where it actually jumped yesterday. So still it's trading in the same range. Any break of those two areas is going to open further movement either towards the 79.10 and then 80 and then 80.60. On the downside, the break of 77.90 is going to open 77.65, low of the 1st of January, and then on the long run it's going to open more downside of the continuation of this trend, probably towards the 65.5 zone. This was the end of the webinar. Thank you for participating, and have a nice day. Goodbye.